Hey guys, it's Saleh. In this video, I will show you a mean reversion strategy in Python, which not only has a high win rate, but it also works on multiple assets. So at least until this point, it is the best mean reversion strategy that I have ever written. As always, first I will show you the entry and exit rules of the strategy on TradingView, and then we will use GPT to convert those rules into Python code so we can run some backtests on it. So you can see that even if you are not a great programmer, you can still do research with Python for algo trading. But before we continue, I gotta say I am not a financial advisor, and everything that you see in this video is simply a trading tutorial. Trading always has risk, so no matter what the win rate that you see for the result of this strategy, you should always be careful and do your own research before trading this strategy or anything like it. So with that out of the way, let's get started. Now this is a mean reversion strategy, which means unlike trend following strategies, we're not going to begin with a leading trend indicator because we don't want the price to continue to its direction. Instead, what we want is for it to go back to its mean, which means we're going to take a position the opposite side of the current direction of the market. Now a great indicator for that is Bollinger Bands. So let's look it up. By the way, the time frame of the strategy is 1 hour. All right, so simply put, we want to buy at the lower band of the Bollinger Bands, which would be this green line here. And if it's a short position, we want to do opposite, which means we're going to open a short position at this price. Now, in case you're not already familiar with the Bollinger Bands, this blue line here is a moving average, and then these two other lines are simply two standard deviations away from that mean. Because statistically speaking, whenever the price goes 2 standard deviation away from the mean, it is more likely to go back to its mean. Now, I don't remember the exact numbers for this, but it's a very interesting theory. However, what I just described isn't actually an entry rule of the strategy. It's basically where we want to open the position. Now, the next indicator, which is the main indicator of the strategy, is simply the RSI. So let's look it up on TradingView. Now, as you already know, the RSI is simply an oscillator. Usually we want to short when it goes above the threshold, which would be here, and we want to go long when it's the vice versa. But the way I want to use it in this strategy, again, because it's mean reversion, is actually quite different, because I actually want to buy at a pullback. So I want to be a direction, I want it to be a trend, but instead of buying instantly, we want to bet that the price is going to have a pullback. So I'm actually looking forward for scenarios like this. So let's say there is a strong trend, but I want to buy at a pullback, like in here, for example, so that when it goes up again, I'm going to make a profit. But here's the thing. If I only buy when the price is, for example, like here above the threshold, the window of opportunity is going to be very small. So instead, what I'll be doing is I will still use the RSI, but on a bigger time frame. So let's do that on TradingView and change the time frame to 4 hours. Click OK. All right, so now from here all the way until here would be a valid opportunity for us to open the position. All right, next we're gonna have to think about situations where maybe the RSI is like this, but there isn't an actual trend or volatility in the market like in this case. So even if there isn't, for example, in here, the RSI could still be overbought, for example, in here, right? And yes, this is a good candle, but it doesn't mean that it's a trend. Right? Now, yes, in this case, if we did open a long position, it would have made us profit, but there will be many false breakouts and we need to be careful with those. So the next indicator that I'll be using is simply the ADX. So let's add it to our chart. And because I don't want to lose so many trades, because this is also some kind of squeeze strategy, you could call it. So we don't want to always wait until the trend is really, really strong, right? We want to be early with it. For that reason, unlike my previous strategies, instead of setting the ADX threshold to a number such as 40, in this one, I'm going to set it to 20. So let's do that on TradingView. So wherever this line is above this threshold, we're okay to open the position. But this could also have some false breakouts. So what I'm going to do is to do the same thing, but also on the bigger time frame. So this will be again 4 hours. We'll do this, but for the 4 hours, I'm going to set the ADX threshold to 40, which would be this line. Okay, so by doing this, I won't be able to buy here. I can only buy from here all the way until here. All right, so we have all the entry rules. except one more thing. We're gonna need one last filter for the trend. Now again, I know this is not supposed to be a trend following strategy, but still we need the trend indicator, except that we didn't begin with that. I'll show you what I mean. So usually in a trend following strategy, you wanna use a trend indicator with the current time frame. Now that could be anything. It could be a moving average, the super trend, the comma indicator, whatever. In this one, I'm gonna use the super trend. So let's add it and also remove the RSI and the ADX so we can see this better. Now let's also disable Bollinger Bands so that this will be more clear to see. All right, so you see, for example, here we have an uptrend because the super trend line is below the current price and it's also displaying the color green. And here we have a downtrend because the super trend value is above the current price. Also, its color is red. Now this is important because that's how we're gonna write the Python code for it. Now here's the thing, if we use super trend as it is right now, for example, in here, this would have been considered a downtrend. But as I explained, I actually want the price to have a pullback, right? So no matter where it's going before, I want it to go actually against that price for me to be able to open the position. So if it changes the direction of the trend very quickly, it won't be good enough for me. So what I'm gonna do is to simply change the time frame one more time from whatever my charts is, which in this case would have been the hourly, into 4 hours. Click OK. And now you see this period here is no longer a downtrend, but it is an uptrend because it is displaying the green color. And just like that, also this one here isn't considered an uptrend because on the 4 hour time frame, it is still a downtrend. Now, this is something that we would have never done in a trend following strategy, but in a mini version, that's perfectly fine. All right, so we talked about the entry rules of the strategy, but now let's talk about the exit rules for both the stop loss and take profit. So for that, I'm going to disable super trend and enable the Bollinger Bands again, zoom it in. All right, so assuming we open the position at the lower band, so I could be here, for example, I want the take profit to be at the upper band, which would be here at this red line. And of course, do the opposite for a short position. Now, what about the stop loss? Well, for that, just like my previous strategies, I'm going to use the ATR indicator. So basically, it will tell us on average how much every candle has changed in the price. So for instance, let's say from here to here is the actual average price that every candle is changing, because in one of them it's changing less, but in another, like here, for example, is changing a lot, right? So let's say this is the average, and then I want 6 times of that value to be below my entry. So if my entry, for example, is here, I want it to be 6 times of this below this, which would end up something like here, for example. Now, if you want the exact value of it, of course, you could look up the ATR indicator on TradingView, and here you would get that value. So in here, it would have been 725. So you need to calculate 6 times of that and subtract it from here. Now, the ATR indicator isn't really helpful for manual traders, at least based on what I've seen, but in algo trading, it is actually very handy. Now, I should also emphasize this, that usually in a trend following strategy, we want to have a high risk to reward ratio, which is why we want to make sure that when we win bigger than the amount when we lose, which is why even when we do use the ATR, we usually use values such as 2 or 3. But because this one is a mini version, we usually do the opposite, which means the win rate of the strategy is going to be higher. Something like 70-80% is like the minimum for such a strategy. But when we win less. And when we lose, we're gonna lose in bigger sizes, which is why our stop loss is being this much below the current entry. Now, if this sounds a bit too complicated, just forget about it. Once I show you some backtest results, you'll see what I'm talking about. All right, so now that we have both the entry and exit rules of the strategy, we're ready to convert it into Python code so we can run some backtest on it. Now, for this part, I want to simply feed the entry and exit rules to an LLM model and have it write the Python code for us. And as always, we have 2 options. One is to use JesseGPT, which is the cloud version of it that I made myself with some instructions specifically for algo trading in Python. Or if you don't want to use my service because you have some privacy concerns, or if you don't want to pay me anything, that's perfectly fine. You can just come to my channel and watch this previous video that I made, which will show you how to self-host this by yourself. But again, I'm going to use JesseGPT, so let's get started. All right, so first we need to ensure we have picked the right model. Now, this is right now set on Coin 3 Coder, which I reviewed a while ago. But for this, I'm going to go with Claude 3.7 Sonnet. which I'm always happy with. So I kind of see no reason to change this. So let's paste in the entry rules. Now I simply ask the model, please write a mean reversion strategy with below rules. Use the RSI on a bigger time frame, specifically the 4 hours time frame. For long positions, the RSI must be above 70. For short positions, do the opposite. As for the trend, use the super trend indicator. Once it is displaying an uptrend, you want to go long. This should also use the bigger time frame. For the ADX, it needs to be above 40 on the bigger time frame. It needs to be above 20 on the current trading time frame. For short positions, do the opposite. For entries in long positions, the entry price must be the lower band of the current Bollinger Bands indicator. Set the stop loss as the current entry price minus 6 times of the current ATR. Risk 2% of the accounts per each trade. For take profit in long positions, close at the upper band of the current Bollinger Bands. For short positions, take profit at the lower band of the current Bollinger Bands. So basically, whatever just showed you on the chart, we are simply asking the model to write it for us. Let's hit enter and wait for the response. All right, so it wrote it for us. It is called mean reversion. So let's copy this name. All right, let's go to Jesse's dashboard, create a new strategy and paste this name here. But I will also add the name RSI at the end of it. So it will be mean reversion RSI. Let's click on create. And now let's go back, copy the whole code and paste it here. Now I could review the code on the editor inside Jesse's dashboard, or we could open the VS Code, which is a significantly better IDE. So that's the one that I'm gonna do. So mean reversion RSI. So let's look it up. All right, so first it defined the higher time frame candles with the syntax get candles, then it's passing the current exchange symbol and specifically the time frame of 4 hours. So this is perfect. The higher TF RSI is returning TA.RSI for the RSI indicator, but instead of passing the current candles, it is passing this higher TF candles. So I really like what it did here. So first it defined a property, and later we can pass it very easily whenever we need to. Next, it defined the higher time frame super trend like this, TA.supertrend, and again passing the higher time frame candles. The higher time frame ADX is again TA.ADX with the higher TF candles, and the current TF-ADX is simply passing TA.ADX, but instead of passing the higher time frame candles, it is passing the current candles, which in Jesse you can always get it by simply using self.candles, so you don't need to define this anywhere. Now for the Bollinger Bands, again, it is using this syntax and passing the current candles because we don't want the Bollinger Bands on the bigger time frame, we want it on the trading time frame. All right, next it defined the ATR by simply returning TA.ATR and then passing the current candles. And then it defined the entry rules of the strategy. So it's also displaying it here in a beautiful comment. So the RSI needs to be above 70 on 4 hours. The super trend is uptrend on 4 hours. The ADX is above 40. Now let's take a look here. So the higher TF RSI must be above 70. The higher TF super trend must be 1. This is incorrect. And then the higher time frame ADX must be above 40, and the current time frame ADX must be above 20. So this is really good, but this part is not correct. So let's first see how many times it is defining this. Okay, so just once. So instead of this, I'm gonna first of all rename this into simply trend, and I will get the super trend value like this. Then I will save this. If the current price is above the value of s.trend, now by the way, this s.trend is this value here. So if the current price is above it, that means we are in uptrend. And if it is below it, like in here, then we are in a downtrend, right? So I'm gonna say if the current price is above s.trend, return 1, which means we are in an uptrend. Otherwise, we're gonna return 0. So let's go back. And now this is correct, except that we should remove this. And for short positions, we should also do this. All right, so everything else looks good. Now let's go to the position sizing, which is right here. Now the entry price is going to be the lower band of the current Bollinger Bands, so I know this is correct. The stop loss is going to be the current entry price, which would be this, minus 6 times of the current ATR. and we are risking 3% of per capital. How? Well, by using this utility function, risk to quantity. First, it gets the current available margin, which is how much money your account has for trading. Then it is passing the number for risk. So you see the second parameter is risk per capital. It is passing 3. Next, we have the entry price, the stop loss price, and then we're gonna have to set the fee rate, and we are passing the current fee of the current exchange that we're trading. Now, this one, you don't really know, just pass it like this and you're good to go. And then to submit the actual buy order, we're using self.buy equals quantity and then entry price. So notice that we are not submitting the stop loss, but we did the calculated so that we can use it here to estimate how much we should be buying in order to risk only 3% of capital per that position. Now for a short position, we're doing the opposite. Now the should cancel entry is true. Now about this one, we need to talk. So let's go back to the chart and bring back the Bollinger Bands. So let's remove this. All right, so suppose that at this point, for example, we decide to submit the buy order. And of course, because we are setting a price lower than the current price, it's going to be a limit buy order, right? So it won't be a market order. And we said that the buy price is going to be at the lower band of the Bollinger Bands. So in this point, that would have been here, right? But as you can see on the next candle, the price didn't reach here. Not only it didn't reach here, but the value of the lower band is now here. So we need to update the order or submit another one and cancel the previous one, right? And if we keep doing this at this point, now this one actually isn't touching this, but in this point it is, right? So if we had kept our earlier entry price, which was actually here, then even at this point, we would not have opened the position. So we want a way to tell Jesse that, hey, keep canceling that order and submitting a new one, if of course the entry rules are still valid. And to do that in Jesse, we need to use the should cancel entry method, and inside it simply return true. If we were returning false, it wouldn't have done this. Which means if your strategy is using a market order through open positions, you're not going to even need to define this at all. Anyways, after we have an open position, so assuming our order have been executed, we will use this method on open position, which is where we submit both the stop loss and take profit. So we're saying if it's a long position, the stop loss is going to have the quantity of the current position, which we pass by self.position.quantity. And then the price of it is going to be the entry price of the current position minus 6 times of the current ATR. For the take profit, the quantity will again be the quantity of the current position, and the price is going to be the upper band of the current Bollinger Bands. And of course, if it's a short position, we want to do the opposite. So very simple. And then we also have the update position. Now, this one is keep updating the take profit price. So assuming that the Bollinger Bands is changing, which it is also updating our take profit order. But actually, I don't want it to do this. So it's doing something that I didn't ask for. So I'm going to remove this. Now, you see, the more specific you are with your request to the model, the more likely it is to follow it exactly, right? And the more vague requests you give it, it might do some new stuff like this. So I should have been more specific in my request, but it's perfectly fine. I'm okay with changing some things in the code, especially when I'm just removing stuff and all the rest is perfectly fine. All right, so now that we have everything working, let's go to Jesse so we can run our first backtest. So let's remove these, choose mean reversion RSI, change the time frame to hourly, and the symbol to BTC USDT. And for the duration of the backtest, I'm gonna do since the beginning of 2024 up until 2025, and I will also choose this date. All right, so let's go back and change the fast mode to enabled. The benchmark is also on. So let's give this a try. By the way, the trading fees are set to almost the double number that it is actually on Binance. I do this on purpose because I want to leave some room for the slippage when the actual trading is happening, or for the funding fee or any extra fee that isn't visible inside my backtest. I also changed the leverage number to 10, but it doesn't actually mean that I'm using 10 times leverage, right? So we'll get to that. Now let's take a look. All right, so we took 9 trades. We made 9.23% in profit. Now the equity curve looks good, but we're not beating the market yet, right? So, but let's go down. And you see the max drawdown is near 0. That's ridiculously low, which is awesome. And the win rate is 100%. Now, of course, this isn't realistic. You should never expect a win rate of 100%. And the Sharpe ratio is 2.48, which is really good. And all right, so everything else looks really good. Now, the first thing I want to do is to go back to the code and increase the size of my position. So I'm gonna add the quantity by 5, and again for short positions. Now, one very important thing, when you do this, you need to remember that you are multiplying the entire size of the order by a specific number. So you're not risking 3% per each capital anymore. So this is kind of invalid now, but I'm doing it because I just want to show you the actual equity curve that we're getting now, because I want to show you how you can beat the market returns at the end. But in an actual production ready, you want to use another formula. You want to increase maybe this number, or even use some other formula for position sizing, such as the Kelly criteria. But that's a topic for another video. So let's go back and rerun this again. Now, by the way, we're getting this error because even though the strategy is using the bigger time frame, which is 4 hours, I didn't define it here. You see, I should have added a data route and chosen the same route, symbol, and then it should have worked. But I didn't do that, and in backtest, that's fine. Jesse will give you an error, but it will take care of it behind the scenes, and the backtest will go through. But if you don't do this in a live trading session, you're gonna face an issue and your session will get terminated. So be careful with that. All right, so let's remove this. And now the equity curve looks significantly better, right? We are closer to beating the market, but we're still not fully beating it. Of course, I could simply add to the size of my position more, especially because it has still a very low max drawdown, but this isn't a realistic number in all the periods, right? So I'm not going to do that. All right, so first I want to show you the result of the backtest on other periods. So let's change this to beginning of 2022 up until 2023 and the first day of that year. Let's run this one more time. I'm going to do 2023 up until 2024, and one more time on 2024 until 2025, and 2025 until almost the 8th month, which is just a few days ago. So let's run the whole thing. All right, so in 2022, you see we are ending with losing a little bit by 9%. The max drawdown is minus 22%, and the win rate is 75%. So even though it's not horrible, we're ending with a loss. So that's the first lesson, that even though it has a win rate of 100% in 2025 and 2024, it doesn't mean it's always profitable. In 2023, which you can see the date here, by the way, we're ending with 97% profit. The max drawdown is minus 12%, and the win rate is still 100%. So it looks really great for these 3 years, but not so great here. But it's not bad either. So let's do one interesting thing. I want to run the backtest starting this date until this ending date. All right, so we can see the whole equity curve. So let's run it. All right, there we go. So now if we were trading this strategy in the past 3.5 years, we would have beaten the market, right? Not only with the ending PNL, but the max drawdown is minus 22%, which is significantly lower than the max drawdown that BTC had in this period. We ended with 176% in PNL. The win rate is 96%, which is absolutely amazing. The Sharpe ratio is 1.47, which is a realistic number and very good, and the average holding time would have been 33 hours. But actually, I think we made a mistake, because if we check out here, it's only taking long positions, so no short positions. So let's go back to the code and see why that is the case. All right, so here for the trend value, when it is an uptrend, I'm returning 1, but when it's a downtrend, I'm returning -1. So that was my mistake. So let's go back and rerun this one more time. And I'm also gonna rerun this one for 2022. There we go. Now we are beating the market and making a profit. So we're ending with 16% in profit. And in this one, we are beating the market even further. So we ended with 253%, and the max drawdown is still -22%, which means the Sharpe is now better. It sees 1.57, but the win rate is slightly lower. It is 94.59. All right, so this is actually great, but there's one problem with this strategy. You see, I don't like this total closed trade number, because over 2.5 years, it only took 37 trades. And I think that's very low, because the bigger the number of trades that the strategy is taking in a period, the higher the statistical significance of that strategy. In simple words, it means you can rely more on the result of the backtest that is in front of you. And 37 for 3.5 years isn't good enough for me. And that brings me to the next good thing about the strategy that I found, which is it doesn't work just with BTC. It also works well with other coins. So let's go back, and I'm gonna add some more trading routes. So I'm gonna add ETH again on the hourly, and I'm gonna add Doge again on the hourly. And by the way, let's also change this to be mean reversion RSI. Now, this is enough for me for now, but you can find others by yourself. And now if you run it again, we're gonna get an error because the fast mode doesn't work when you are trading multiple trading routes. Right, so we need to disable this, and I'm also going to disable the benchmark so we can see the equity chart better. So let's run this one more time. Voila, we have something with bigger number of trades. So it is 75 now, and look at this equity curve. It's beautiful. Now the P&L is 813%. The max drawdown is still -22%. So it didn't even get worse. And the win rate is 92%, and the average holding time is a little bit higher. Now, by the way, you need to be careful with this because it is near to 70 hours, right? So that's a few days. So if you trade this strategy at any point, you're gonna have to hold the position for days, maybe in a loss. And psychologically, that's going to be difficult. So that's something to be aware of. And then the Sharpe is now 1.95, which is amazing. The winning streak is 32 and the losing streak is 2. Right. Overall, I think this looks great. Probably the best strategy I've ever made so far. And let's not forget that I'm still trading only 3 assets. We could continue this for some other assets and find some good ones and improve the results even further. Now, as always, I am going to submit both the code and the result of the backtest of the strategy on other timeframes or symbols on our strategies page, which you can check it out. And if you already have a free account, you can also download the code of the strategy, assuming it's a free strategy like this one that I just shared. Now guys, a lot of effort goes into research before making a video like this. So if you want me to continue making them, please support me in any way that you can, liking the video, posting a comment with your opinion, and also subscribing to the channel helps me a lot. So thank you so much for your continued support. I'll see you in the next one.